So we tend to learn lessons after these, or so we hope to learn lessons. And let's take the lessons potentially for Federal Reserve Chairman Jerome Powell. And I know you've spoken in the past about the Fed's policy. Now we've certainly seen some consequences of the rapidity of the hikes. People are waiting, thinking, will he hike yet again? They maybe this time last week, perhaps they thought differently. Do you get the sense that there is a bit of a wake-up call there in terms of what's happened?
There are two big mistakes the banks made, central banks. I don't know whether they're going to learn the lesson, at least with these regimes. One is suppressing interest rates is like rent control.
Mm-hmm.
It destroys and distorts a market. And why? How did they? And so they went. They all did it. Bought globs of bonds. Had negative interest rates. Never in human history have rates been as low as they've been since around 2009, 2010. And so the lesson is let the market set the rates. And the other thing they have is this weird concept of inflation, 2%. Where did that come from? From a guy in New Zealand at a central bank there who posited in the 1980s.
The optimal.
Well, that seems like a good rate. Again, no research supports that, real research, but they all adopted it. The Federal Reserve finally formally adopted 2%. Well, that's better than zero, because if you're at zero, it might go to deflation, which is the end of the world. And how do you measure it? They have all their different favorite measurements. It's preposterous. Central banks should have only two duties, unless you want to put regulatory powers with them as well. One is keep the currency stable and deal with the occasional panic, whether it comes from a war, an attack, natural disaster, whatever. You deal with the emergency. And even there, they haven't learned the full lesson of what the Bank of England taught back in the 1860s, which invented a lender of last resort, was you charge an above market interest rate. So, yeah, you bring in your collateral, get the short-term loan, get the cash you need so you don't have to go under like happened with our friends in Silicon Valley. Mm-hmm. But you have an incentive to quickly pay it down as fast as possible. Instead, after 2008, 2009, the thing was, let's keep this going forever.